So, been on the road for the last couple of months. Strong institutional themes that we've seen. Critical metal focus is clearly evident, with copper being the most critical of those critical metals. High ESG standards are still driving incremental investor appetite from a pool of capital that we haven't seen before, and driving interesting transactions, certainly in the gold space, to bone up that breadth and depth of ESG exposure. And access to power and water are clearly issues and hurdles that a lot of these projects globally are facing, because, quite frankly, they are probably one of the most important commodities that we see in the world today. And so what I want to really leave you with today is NorthIsle Copper Gold is really part of this solution for these looming issues that we see today. It's funny, I just ran into Ross Beatty, who's a very close friend of mine, and knows these assets extremely well. And he's been advocating for the developability and the fact that we do have a tremendous amount of positive attributes around First Nation support, around community support in British Columbia, around specifically the infrastructure in this area. So it's really nice to hear there's advocacy across a group of people that know this asset quite well. So I will be making forward-looking statements throughout this presentation. I refer you to our disclaimer explaining the nature of such statements. So NorthIsle, our value is underpinned by a large copper and gold porphyry as defined by a robust preliminary economic assessment. That is PEA yields approximately $1.1 billion Canadian after-tax net present value at 8% discount rate. That's done at a $3.25 copper price and $16.50 gold and a $10 moly price. It yields approximately 20% after-tax IRR, a 22-year life of mine. Production profile over those 22 years is approximately 100 million pounds of copper production a year and 100,000 ounces of recoverable gold production a year for those 22 years. So that asset mix or profile mix, commodity mix, is approximately 60% copper and about 30% gold by revenue, and moly and rhodium are byproducts. But having said that, moly, the fact that it's tripled in price since we did this PEA, will have a much more significant exposure to the profile. The assets are located in British Columbia, which is a prolific mining jurisdiction. People don't remember this, but BC was one of the top jurisdictions in the world for copper production, and certainly remains the top jurisdiction in Canada for copper production, because of its leadership in ESG standards and just getting things done, getting mines in production. There is political will within the province to once again be the world's epicenter for sustainable mining, which is attracting majors across the board and investors, including, obviously Newmont and Newcrest and others that have come into the fray over the last couple of years. The company was founded by Dale Corman, who's our chairman, and recently got inducted into the Mining Hall of Fame. It boasts a board and an executive team with over 200 years of experience finding, developing, financing, and selling, of course, mines across many, many decades. There are major shareholders that include Michael Gentili and Donald K. Johnson, who are strong cornerstone investors. We just announced a cornerstone financing a couple of days ago, which involved these two individuals, including Dale Corman and myself, which I can explain a little bit later as well. And lastly, our 100% owned exploration land package is vast, and it sits on approximately a 50-kilometer porphyry trend, starting at that historical BHP Island copper mine, which at one time was Canada's largest copper mine. So just a little bit of a backdrop, right? Because this is, everyone talks about electrification, decarbonization. According to Wood Mackenzie, $1.2 trillion needs to be spent on critical metals to reach our 1.5-degree climate change goal. Aspirational as it may be, that ship has sailed, and governments have been mobilized now to try to achieve that goal. So of that $1.2 trillion of critical metals, $750 billion needs to be spent in copper. So this shows that copper is indeed the critical metal. And of that $750 billion, over $100 billion needs to be spent by 2030. I can tell you this as a fact. There doesn't exist that many copper projects in the world today that can satisfy that demand. So how important is ESG in assessing projects? Well, I've been part of this business for 20 years, investment banking for 20 years, advised some of the largest clients in the world. I can tell you it's becoming more and more increasingly important. So Canada is among the very few countries in the world that are defined as low-risk jurisdictions. And BC is second to none, housing Canada's, as I mentioned, currently top 3 copper producing mines within Canada. And so this is actually compelling strategics and majors incumbents to actually look into the region to diversify their risk profile. Because as I said, to access this incremental group of massive capital that exists that are focused on ESG-focused related companies and assets, they have to actually show that they preside within this green-blue area of the world, or at least the majority of their assets have to reside within that world. Will every single asset be produced from these countries, these low-risk ESG countries? Absolutely not, because the previous chart shows that there are not that many countries in the world that can satisfy that demand. But there is going to be a need for those majors to actually be looking into these countries very aggressively. And I think you've been hearing that rhetoric coming from the conferences recently. So clearly there's a scarcity of quality projects in Canada. This is pretty much it in terms of how you define, in terms of assets that are defined and ready to be moved forward through development and production. So NorthIsle will produce approximately 156 million pounds of copper equivalent production a year for 22 years, life of mine, according to our preliminary economic assessment. So that ranks us number 2 in Canada. As I said before, we have access to water, we have access to power, we have roads, we've got ports. These are all virtues and strengths of the projects that are recognized by a gentleman like Ross Beatty, who just mentioned that to me the other day, how he's reporting that this is actually the case, having owned these assets at one point. And currently, we are currently trading at about 4% or 0.04 times our net asset value. So the opportunity is absolutely compelling from a valuation perspective, which is why we think that this is a very compelling opportunity given what I mentioned before. So how do you think about this in terms of developability? How do we think about this in terms of developability? Well, the project has 3 prongs of support from the feds, from the provincial, and from local First Nations. So on the federal side, we've all seen the announcement in December when they came out with their critical metal strategy, calling this a generational opportunity for Canada. So copper is one of 6 opportunities within Canada that has been defined as a critical metal. Approximately $4 billion has been carved out of last year's budget, 2022's budget, for critical metal projects such as ours. And the feds will work very closely with the provinces to identify the projects that should be green light lit. And the reason why I bring that up is because we've done an incredible job within the province to generate that support as it relates to being identified as, what I said, one of a very few amount of projects that can be developed quickly. And as everyone understands, I think in this room, the importance of reconciliation in First Nations, this is really the key within the province, within the country, to get these projects expedited. And we've done a fantastic job, as evidenced by our agreements with Quechua First Nations, and certainly recognized by Minister Ralston in our last press release as doing the right thing, effectively setting out the model for British Columbia being the epicenter for critical metals development. So getting a little bit into the project here, I think this really gives you a very good snapshot of why we think that the infrastructure is so good. So our 100% owned area is outlined in the gray. Our project defined by the PDA is defined by the blue circles. You've got that trend line. You can see a very, very definitive trend line around the porphyry, 50-kilometer porphyry district that starts from the Island Copper Mine which is on the bottom right-hand quadrant, that little blob there. That port right there on that, in that mine, that's the closest deep-sea water port from continental America to Japan, which is where BHP sold their copper and moly concentrate. That's only about a 25-kilometer trucking distance to where our project is currently being contemplated on the road that Taylor has already ventured a couple of times on with me. Port Hardy is only about a 40-minute drive along 2 paved roads to the north and the southern part of our property. And Port Hardy housed the 3,000 workers that BHP needed during that 25-year life of mine. So this was not a flying camp. We don't have to build a camp for any of our exploration and development activities, and certainly when this mine comes into production, there's no need to actually build a town for it. So that really impacts our capital costs. It impacts our operating costs. We have 2 substations right now. One is in Port Hardy, one is in the Island Copper Mine, just within 7 to 8 kilometers from our property. So really, as it relates to the project infrastructure, it is second to none. So the board and management team, as I mentioned before, has extensive experience finding, developing, financing, building, and selling mines through many, many, many decades, and has created immense value for its shareholders. So we, as I mentioned, we recently announced a $2 million at-the-market, no unit, no warrant offering with our cornerstone investors. That includes Michael Gentile, who I'm sure many of you know and understand is a prodigious investor within our mining space. Donald K. Johnson does not need an introduction. He's a legend in the Canadian capital markets business and has amassed over $500 million through his investments in Belize. And Dale Corman, who I mentioned before, is our chairman and Mining Hall of Famer. So within that cornerstone group, we've just raised $2 million. And the rationale for this is twofold. One, the cornerstone investors own approximately 30% of the company. So we know that this is going into very solid, good, sticky, supportive hands. It does fully finance our activities in 2003 while limiting massive dilution. We're only about a $40 million market cap company, so we don't want to be diluting our shareholders, many of whom I think are in the room today. So thank you very much for that. I appreciate it because I'm a major shareholder of the company as well. And secondly, again, this market, look at it this way. Adding influence in this market is absolutely critical. You need influencers. This is a market that is driven by influencers. And this cornerstone group has invested in and created enormous shareholder value over many decades and fully understands the value proposition of NorthIsle. So we do continue to build our institutional following. We're about 15% currently. We're covered by 3 research channels, obviously led by Taylor. Thank you very much. And our balance sheet is clean, no debt, and have a strong cash position. So what's the value proposition? Pretty simple for a very complicated chart. 4 deals over the past 2 years, ranging from about approximately 0.45 times to 0.9 times net asset value for development projects. Currently, the company, comparable company average is about 0.2 times to 0.4 times. NorthIsle, today, trading at 0.04 times, would be a 4x just to get to the bottom end of the range, and nearly a 10x to catch up to the top end of that range. So, as I mentioned before, we did our PEA at $3.25 copper, $16.50 gold, $10 moly. Every 25-cent movement from $3.20 moves the project NPV by about $300 million. Copper currently is at over $4. Moly price has tripled. And so the moly price has not been factored into that cost increase. Sorry, that price increase. So we've been very busy in 2022. We signed agreements with Quetzina First Nations, as I mentioned. We identified a gold-enriched zone in Northwest Expo, which is what we're going to define as a resource, 40 to 50 million ton resource this year. I can talk about that in more detail later. We did the first, as far as I know it, critical metals financing of its kind for $7 million. We built out our board and management team to advance the project. We drilled approximately 200 meters extensions beyond the pit shell and extended the high-grade zone at Hoshelu, and we also initiated network. So our exploration strategy is quite extensive. As I mentioned, over 50-kilometer porphyry district starting from the historical Island Copper PHP mine. The system is akin to an island arc porphyry system that you would find in Indonesia, so that would be a system that hosted mines such as Batu Hijau. The multiple targets defined in 2023 and beyond are targeting higher grade zones outside of our pit shell and going after the buried porphyry at Pemberton Hills. At Northwest Expo, as I mentioned, we're looking to drill 8 holes off of 5 pads this year. That's in addition to the 8 holes we've drilled to define a 40 to 50 million ton resource, incremental resource at grades 3 to 4 times higher than we currently have, and a resource estimate over a metal value over 2 to 3 times higher than what we currently have. So this is, for some companies, a company maker, notwithstanding the fact that we already have a $1 billion project underpinning our company today. At Hoshelu, we drilled in 2022, expanded the high-grade zone, as I mentioned, and we're going to extend below the pit shell. We will continue to progress this infill and step-out drilling as well. And then in Pemberton Hills, we released this thesis just last week. What we know here is we have a massive system. This is all within a 7-kilometer distance of our open pit project. What we know is we have a massive system, 6.5 kilometer by 1.5 kilometer lithic gap. We know we have a buried porphyry, and it's tilting towards the southeast. We know that we have copper mineralization. What we're looking to find is how deep does the system go, and what is the grade. And so what we're planning on doing is we've identified the drill targets, we've identified the initial 14 drill targets, and our objective is to drill this year once our permits are received. This is just a snapshot of the lithic gap. This shows the magnitude of this, size of this. This is, you can see it's kind of this bubbling up across the surface in an arcs towards the northwest. As has been described to me in the past, if this thing was seen in Chile, this thing would be drilled like Swiss cheese. And then lastly, on the exploration side, Goodspeed is also only about 2-3 kilometers away from our project. This is something that is now coming to our purview. It's near surface, that has visible mineralization, which aligns well with the geophysical anomaly work that we did, that showed the anomalies in 2022. There has been historical drilling on this, meaningful historical copper grades from surface, and the area between Red Dog and Goodspeed, which again is approximately 2-3 kilometers, is almost entirely undrilled at this point. So to wrap it up, near-term catalyst, Northwest Expo, gold-rich resource definition, 40 to 50 million tons this year. Advanced Pemberton Hills drilling on those 14 holes this year. Target definition for Goodspeed this year. Complete the MET testing that we announced, including Northwest Expo this year, and advancing our First Nations and community relationships as we have been doing since the inception of this company. Thank you very much for your interest, and I'm happy to take questions.